Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we will start our new topic of Income Tax Act. This is very important topic in which we will discuss about the income which will be taxable under the head of capital gain. Is that under the capital gain, the profit or the gain which is arise from the transfer of from the transfer of capital assets will be taxable. Is that when there is any person who transfer any capital assets, then on the transfer of such capital assets, any profit if any profit is arise, then such profit will be taxable under the head of income from capital gain. Such profit will be taxable under the head of capital gain. Is that number one? There should be the transfer. There should be the transfer and there should be the capital assets. Is that if there is any income or there is any gain or profit which is earned by the assessee on the transfer of any capital assets, then such gain will be taxable under the head of capital gain. In this class, we will discuss the basic concepts which are relating to the capital gain topic. Means in this class, we will discuss what is the capital asset, what is the meaning of capital assets, and what is the long-term capital gain, short-term capital gain. Means in this class, we will discuss some basics point so that before starting the taxation about the such profit or such gain, we will understand the basic point. Means what assets will be considered as capital assets, what assets will be considered as stock and trade, means which is not considered as capital assets, and what considered as transfer, means when we will sell anything, whether it will be considered as transfer or not. So we will discuss, for the purpose of this, we will discuss the definition of transfer and what is the long-term capital gain. Under the capital gain, there are two type of gains: long-term capital gain and the short-term capital gain. So what is the long-term capital gain and what is the short-term capital gain? Long-term, what is which period will be considered as long term and which period will be considered as short term. So in this class we will discuss some basic concept which are relating to such a topic so that we can properly understand when we calculate the amount or when we calculate the income which is taxable under the head of capital gain, then we can easily identify this is long term capital gain, this is short term capital gain, or this is on the transfer of capital assets or not. So now we will start our discussion on the capital gain topic, capital gain. First, we will discuss basic concept which are relating to such a topic. Introduction. First, we will take a view, or first we will understand the introduction of such a head of such head. Means what is the capital gain? What is the capital gain? So before starting the definition of capital assets, transfer, long-term capital gain, short-term capital gain, first we will discuss what is the capital gain, means in which circumstances capital gain will be arise or capital gain will be taxable, means when the capital gain tax is levied. What are those circumstances in which capital gain is levied? Means the capital gain tax is levied. So, in the case of capital gain, the capital gain will be levied on the transfer of capital assets, on the transfer of capital assets. So if there is a transfer, or there is a transfer of capital assets, then the capital gain will be arise. Means if on such a transfer the gain is arise, then such a gain will be taxable under the head of capital gain. Under the head of capital gain. For the example, there is a person, Mr. Ram, he has a capital assets. We will discuss the definition of capital asset. He has a capital assets. He has a capital assets, and he transferred such a capital assets. He transferred such a capital assets. For the example, the value of the assets is 2,50,000, and he transferred oblique sale. He sell it as 3,50,000 rupees. So in this situation, the amount of profit will be sale consideration minus cost of acquisition, means value of such assets. 1 lakh rupees, then this is the amount of gain. This is the amount of gain. It will be considered as capital gain. Is that the gain which is arise on the transfer of capital assets? Then such a gain will be known as capital gain. Such a gain will be known as capital gain, and there are two type of such gain: long-term capital gain and the short-term capital gain. So the gain which is arise on the transfer, transfer on the transfer of any assets, of any capital assets, then such a gain will be known as capital gain, and it will be taxable under the head of capital gain, under the head of income from capital gain. But there are some transfer which will not be considered as transfer, means there are some circumstances which are considered as transfer, but under the capital gain head it will not be treated as transfer, and if there is any gain which is arise from such transfer will not be taxable under the head of capital gain, under the head of capital gain. In this class, we will discuss long-term capital gain, the knowledge of cost inflation index. Means to calculate the long-term capital gain, the knowledge of index, the knowledge of inflation index is also very much important. So, in the case of this class, in this class, we will discuss basic concept of the capital gain. So, Section 45 provides that. Section 45 is the charging section. For Section 45 is the charging section of the capital gain. Section 45 provides that any profit or any gain, which is arise from the transfer, of any capital assets. There is any profit or there is any gain which is arise on the transfer of any capital assets in the previous year, then it will be taxable. It will be taxable under the head of capital gain. If there is any profit, there is any gain which is arise on the transfer of any capital assets, then such gain will be taxable under the head of capital gain. Such gain will be taxable in the year in which the transfer taken place. Such income or such profit will be taxable in the year in which the transfer taken place. So Section 45 is the charging section, and according to this, there are two terms are very important. Number one, there should be a transfer, and number two, there should be a capital asset. If there is a transfer of capital asset, then the gain will be considered and it will be taxable under the head of capital gain. Now we will discuss capital asset. What is the meaning of capital assets? Before such discussion, we will understand an example. Discuss an example. For the example, Mohan, and he has some goods. The value of the goods is 2 lakh. He has some goods and the value of the goods is 2 lakh. He sell such goods to Sohan. He sells such goods to Sohan. Sale, it is also considered as transfer. He transfers such goods to Mr. Sohan at 2,50,000. So in this case, the amount of profit will be sale consideration minus value of goods 50,000 rupees. In such case, the profit will be 50,000 rupees. So in this situation, there is a transfer. There is a transfer, but the goods is not a capital asset. But the goods is not a capital asset. So such amount 50,000 rupees. So such 50,000 rupees on the profit of sale of such goods will not be taxable under the head of capital gain because the goods is not a capital asset. It is not a capital asset. If it is capital asset, then it will be taxable under the head of capital gain. Otherwise, it will not be taxable under the head of capital gain. So there should be a transfer and there should be a capital asset. Now we will discuss the meaning of the capital asset. What is the meaning of capital assets and what assets will be considered as capital assets? So section 2 subsection 14 of the Income Tax Act 1956 contain the definition of capital asset. Section 2 subsection 14. Capital assets means number one, the property of any kind which is held by the assessee, whether or not connected with his business or profession. Is that any of the property, any kind of property which is held by the assessee, any kind of property which is held by the assessee. The assets, whether or not connected with the business or profession, means any kind of property which is held by the assets, whether it is related to the business or not related to the business, then it will be considered as capital assets. Number two, any security which is held by the assessee, any security which is held by the assessee or by the assessee is a foreign institutional investor. There is a foreign institutional investor and he held some security in which he invested his money in security in the accordance with SEBI regulation. Then these security will be considered a capital asset to such a foreign institutional investor. Means for such a foreign institutional investor, these securities will be considered as capital assets. The security will be considered as capital asset. Is that any of the property, any property means any kind of property which is held by the assessee, whether which is related to the business or not related to the business, then it will be considered as capital assets. It will be considered as capital assets. Number two, any security which is held by the foreign institutional investor, which is held by the foreign institutional investor, and such a foreign institutional investor invests his money in the security in the accordance with SEBI regulation, then such assets will be considered as capital assets. Then such assets will be considered as capital assets. For the example, there is a company ABC. There is a company ABC and such company has a building. Such company has a building and such building is related to his business. It is because in such building he is performing the business activity. He is performing the business activity. He is the ABC performing the business activity. It is provide the services. Means ABC company provide the services to the persons. They are provide computer software development services. So in this situation, such a capital assets, such building will be considered as capital assets because any kind of property which is held by the assessee is ABC. The kind of property is building. The kind of property is building, whether or not related to business. So such assets is related to the business. So in this situation, such building will be considered as, because he is not dealing with the buildings, he is not a property dealer, and he is doing the business activities in such a building. So such a building will be considered as capital assets. Such building will be considered as capital assets. Next example, there is a person Ram, there is a assessee Ram. He has some furniture. He has some furnitures. He has a furniture in his house. in his house. He is using these furniture for his own purpose. For his own purpose, then such property will be considered as capital assets. Then such property will be considered as capital assets. Next example, there is a person Mohan. He has some. He has some machine. He has some machine and he deals in machinery. Means he sell out these machinery. He sell out these machinery as goods. As goods. In his stock, he has machinery. In his stock, he has machinery in the business stock. So it will not be considered as capital assets. It will not be considered as capital assets because any property which is held by the assessee, whether or not connected to the business, but it does not include, stock and trade. But it does not include stock and trade. If there is any assets which is held by the assessee, if there is any assets which is held by the assessee as a stock and trade, as a consumable, as a raw material, then it will not be considered as capital assets. Then it will not be considered as capital assets. Is that in the case of point 1, other than security referred in B above. So in the case of point 1, point A, if such property is held by the assessee as stock in trade, as raw material, as consumable, then such assets will not be considered as capital assets. For the example, there is a person, Ram. He is a seller of, or he is a seller of furniture. In his stock, he has furniture. So in this situation, the furniture is considered as stock and trade. So it will not be considered as capital asset. It will not be considered as capital asset. So if there is any property which is held by the assessee, either by the way of stock and trade, raw material, consumable, then it will not be considered as capital assets. It will not be considered as capital assets. So now we will discuss next example. There is a person, Mr. Mohan. He is a financial investor. Means he is a foreign institution investor. Foreign institutional investor. He invests his money. He invests in security. He invests in security as per regulation of SEBI. As per the regulation of SEBI, Mr. Mohan, he has invested in foreign institutional. In the foreign institutional security means he invests in the security. There is a foreign institutional investor. He is a foreigner. So the name will be John. There is a John. He is a foreign institutional investor, and he invests his money in the some security, and according to the regulation, according to the guidance of SEBI. So in this situation, the security will be considered as capital asset. The security will be considered as capital assets. So this is the point 2. Point B. Any security which is held by the foreign institutional investor which has invested in the security according with the SEBI guidelines or SEBI regulation, then such a security will be considered as capital assets. This provision, stock in trade, will not be available in the case of security which is defined in this point. Means if such a John, he deals with the security, with the securities, with the securities, then it is also considered as capital assets. Means if this is the if this is the stock and trade for such John, but it will be considered as capital asset. But it will be considered as capital assets means the concept of stock and trade will not be applicable in the case of such point. Is that when there is any investment which is made by the foreign institutional investor in the security either as capital assets or either as stock and trade, consumable or raw material, then in the both cases it will be considered as capital assets. It will be considered as capital assets. Personal effects. Personal effects will never be considered as capital assets. Personal effects, just like any of the movable property, just like clothes, wearing clothes, apparels, furniture, which is used by the assessee or any family member who is dependent on him, is that the personal efforts means the personal things, just like apparel, just like furnitures and furniture which is held by the assessee for his personal use. If there is any personal thing, means for the example, there is a jewelry, there is the jewelry which is sorry, not a jewelry. For the example, there is a furniture. There is a furniture which is used by the assessee for his personal use. For his personal use, or these furniture is used by the any family member who is dependent on him. So such furniture will not be considered as capital assets. Personal effects will not be considered as capital assets. But when we will calculate or when we will consider personal effects, then jewelry, archaeological collection, drawings, paintings, speculatures, or any work of art will be considered as capital assets. When we will determine about the personal effects, then jewelry will be considered as capital assets. Means when we will transfer the jewelry, then the capital gain will be arise. Archaeological collection, paintings, drawings, speculatures, or any work of art will be considered as capital assets. These all are will be considered as capital assets. Is that personal effects? Personal effects, not a capital assets. Personal effects will not be considered as capital asset, but jewelry, drawings, drawings, painting, paintings, and speculatures, or any work of art will be considered as capital assets. Is that for the example, mr mr Mohan, he has his or her, means her wife, or her wife jewelry, wife personal jewelry, and and he sell such jewelry. So in this situation, the jewelry will be considered as capital assets. It is a capital assets. And on the transfer of such jewelry, the capital gain will be arise. Such jewelry it is related to his personal or her personal, but it will be considered as capital assets. But it will be considered as capital assets. The personal effects will not be considered as capital asset, but jewelry, paintings, drawings, any work of art, archaeological collection, speculator, these all are will be considered as capital assets. These all are considered as capital assets if there is any transfer of any of these things, then it will be, or if there is any transfer of any of these things and any gain or any profit arise on the transfer of any of these things, then it will be taxable under the head of capital gain. So he transferred his jewelry. The value of the value the value of jewelry, for the example 50,000, and he said it as 75,000 rupees. So the 25,000 rupees will be taxable under the head of capital gain. It will be taxable under the head of capital gain. So the personal effects will not be considered as capital asset, but jewelry, archaeological collection, drawings, painting, speculature, and any work of arts will be considered as capital assets. It will be considered as capital asset. Next, rural agricultural land. Rural agricultural land, which is situated in India, is that if there is a land, there is a agriculture land which is situated in India, which is situated in India. We are discuss the does not include means these are the definition of this is the definition of property. Sorry, capital asset, but it does not include. It does not include means if there is a rural agriculture land, this is a rural agriculture land, not a urban. This is the rural agriculture land, is that if there is a rural agriculture land in India, then it will not be considered as capital asset. Means the rural agriculture land will not be considered as capital assets. As per the definition, that only rural agriculture land is out of the preview of capital assets. Means only rural agriculture land will not be considered as capital assets. But if there is any urban land, then it will be considered as capital assets. Then it will be considered as capital assets. Accordingly, the agriculture land which is described is A and B below. We will discuss. Being land situated within the specific urban limits will be fall with the definition of capital assets, and the transfer of such land will be attract capital gain tax. Is that if there is any agriculture land and such agriculture land is within the specific limit, means within the specific area, then it will be considered as capital assets. Otherwise it will not be considered as capital assets. For the example, Mr. Ram, he has transferred his rural agriculture land. The value of land, for the example 1,50,000, and he sell it as 1,75,000. In this situation, the profit is 25,000. So the rural agriculture land is not a capital asset, then it will not be taxable. Such gain or such profit will not be taxable under the head of capital gain. It will not be taxable under the head of capital gain. Next example, Mr. Ram, he transfer his urban he is transfer his urban agriculture land. The value of land, for the example 2,50,000, and he transfer means he sell it at rupees 3,50,000. The profit is 1 lakh rupees. Then it will be taxable under the head of capital gain, because urban land urban land is a capital assets. The urban land is a capital assets and such a gain will be taxable under the head of and such a gain will be taxable under the head of capital gain. Is that any of the gain which is arise on the transfer of capital asset, it will be taxable under the head of capital gain. So the urban land is a capital asset. It is a capital asset, then it will be urban agriculture land is a capital asset. So any profit or any gain which is arise on the transfer of such capital, on the transfer of such capital assets means on the transfer of such urban land, then it will be taxable under the head of capital gain. Now we will discuss we will discuss some limits. Means if the land, if the agriculture land is situated, if it is situated within the specific urban limit, then it will be considered as capital assets. Number one, agriculture land. If there is any agriculture land and such agriculture land is situated in any area within the jurisdiction of municipality. If there is for the example, there is a agriculture land and such agriculture land is situated, it is situated within the area of jurisdiction of the municipality or containment board, which area having the population not less than 10,000. Is that there is a agriculture land and such agriculture land is situated within the jurisdiction of municipality, within the jurisdiction of municipality, and such area has and in such municipality or in the area of such municipality, the population is not less than 10,000, means the population is more than or 10,000. Or when there is any agriculture land which is situated in any area within the distance measured aerially in relation to the range of population and shown here under, is that if there is any agriculture land which is situated in the following range, in the given range, then it will be considered as agriculture land, then it will be considered as agriculture land. Number one, short at aerial distance from the local limits of the municipality or the containment board, which is referred to in item A. Shortest aerial distance means the distance from the local limit of municipality. Means this is the distance from the local limit of municipality or the local limit of containment board. Next, population according to the last preceding council of which the relevant figure has been published before the first day of the previous year. Means the agricultural land should be situated within such a limit and there should be such a population. Means the population should be more than this. Number one, the agricultural land should be situated. The agricultural land should be situated within 2 kilometers. Means the maximum distance is 2 kilometers. Is that if there is any agriculture land, if there is any agriculture land which is situated within 2 kilometers of a containment board or of a municipality, and the population of this area is more than 10,000, it is more than 10,000, then it will be considered as urban land. Sorry, it will be considered as agriculture land and it will be considered as capital assets. And it will be considered as capital assets. Number two, the land, such agricultural land is situated in more than 2 kilometers but up to 6 kilometers area. Means the land is situated more than 2 kilometers but up to 6 kilometers of such a containment board or of such municipality, and the population of such area or the population of such municipality area is more than 1 lakh, then such agricultural land will be considered as urban agricultural land and it will be considered as capital assets. Next, the land is situated within 6 kilometer up to 6, sorry, more than 6 kilometer but up to 8 kilometers. Means there is a land and it is situated within 8 kilometers, within 8 kilometer maximum, and the population of such a area or the population of such a municipality board means municipal area is more than 10 lakh, then such land will be considered as urban agriculture land, and it will be considered as capital asset. And it will be considered as capital assets. Is that for the example we will discuss it is just like there is a land, there is a agriculture land, and it is within 2 kilometers of municipality, within 2 kilometers of municipality or containment board, municipality and containment board, and the population is more than 10,000, more than 10,000, then it will be considered as urban land, urban agriculture land, urban agriculture land, and it will be considered as capital assets. And it will be considered as capital assets. It will be considered as capital assets. Number 2, there is a agriculture land and which is situated in the area more than 2 kilometers, but up to but up but up to 6 kilometers, 6 kilometers, and the population is more than 1 lakh, population is more than 1 lakh, then it will be considered urban agriculture land, and it will be considered as capital asset. And it will be considered as urban land, or it will be considered as capital asset. Next, there is another agriculture land, and situated it is situated within sorry more than sorry more than 6 kilometers, but up to 8 kilometers of containment board or municipality. 6 kilometers, but up to 8 kilometers, or up to 8 kilometers of municipality or containment board. The population is more than 10 lakh. So it will be considered as urban agriculture land, and it will be considered as capital assets. It will be considered as capital assets. Is that if there is any person he has a agriculture land, if there is any person he has a agriculture land, and such a agriculture land is within the 2 kilometers, within the 2 kilometers of any containment board or of any municipality, and the population of such area is 10,000, of such areas is more than 10,000, then it will be considered as a urban capital, urban agriculture land, and it will be considered as capital assets. It will be considered as capital assets. Next, if there is any person he has a agriculture land, he has a agriculture land, and he live in an area where the population is more than 1 lakh, and such agriculture land is within the limit of 6 kilometers, within the limit of 6 kilometers of such from such a containment board or from the municipality. So in this situation, such a land will be considered as a urban agriculture land, and it will be considered as capital asset. It will be considered as capital asset. Next, there is a person. Next example, there is a person he has a agriculture land. The population in which he has a agriculture land is 12 lakh. It is 12 lakh, and such a land is situated within 8 kilometers of such a containment board or of the municipality. Then such land, such agriculture land will be considered as urban agriculture land, and it will be considered as capital asset. It will be considered as capital asset. So this is the concept. In the case of agriculture land, means which agriculture land will be considered as urban agriculture land and which land will be considered as rural agriculture land. As per the provision of Income Tax Act or as per the provision of capital gain, the rural agriculture land will not be considered as capital assets. And when there is any transfer of rural agriculture land, when there is a transfer of rural agriculture land, then no capital gain will be added. No capital gain will be arised. But if there is a transfer of urban capital, urban agricultural land, then the capital gain will be arise because the urban agricultural land will be considered as capital asset. And this is the criteria, means when it will be considered, when a agricultural land will be considered a agriculture, means urban agricultural land or rural agricultural land. So now we will discuss it by the way of example. There is the area and shortest aerial distance from the local limit of municipality and from the local limit of containment board. The population, and now on the basis of this we will determine whether it will be considered as capital assets or not. Number one, area A. The distance means the land is within 1 kilometers. It is within 1 kilometers and the population is 9,000 only. It is population is 9,000. So it will not be considered as capital assets, because if there is any land, if there is any agricultural land which is within 2 kilometers, then and the population is more than 10,000, then it will be considered as capital assets. So this is within 1 kilometers. One means it is such a land is situated within 2 kilometers, but the population is less than 10,000. So it will not be considered as a capital assets. Next, there is a area B where the land is situated within 1.5, means it is the land is situated in 1.5 kilometers from local limit of municipality or containment board. The population is more than 10,000. It is more than 10,000, that it will be considered as agricultural land. It will be considered as a capital assets. Next, there is another area C. There is another area C. The land is situated within 2 kilometers. It is situated within 2 kilometers. The population is 11 lakh. It will be considered as capital asset. It will be considered as capital asset. Next, there is another area in which the land, agricultural land is situated. Agricultural land is situated within 3 kilometers. Within 3 kilometers, and the population is 80,000. The population is 80,000. It will not be considered as agricultural land, because if the agricultural land which is situated is more than 2 kilometers, if it's situated more than 2 kilometers but up to 6 kilometers, and the population is more than 1 lakh, and the population is more than 1 lakh, then it will be considered as capital asset. But in the case the population is only 80,000 and the properties means the land is situated in more than 2 kilometers but up to 6 kilometers, then it will not be considered as capital assets. Then it will not be considered as capital assets. Next, there is another property. There is another area E where land is situated within agricultural land is situated in 4 kilometers. The population is 3 lakh. It is more than 1 lakh, means the area is more than 2 lakh but up to 6 lakhs and the population is more than 1 lakh, then it is a capital asset. Next area F. The agricultural land is situated within 5 kilometers and the population is 12 lakh, it will be considered as capital asset. Next, 6 kilometers. The agricultural land is situated within 6 kilometers and the population is only 8,000. Only 8,000. It will not be considered as capital asset. It will not be considered as capital assets. Next, there is a H area. The land is situated within 7 kilometers, means more than 6 kilometers but up to 8 kilometers. More than 6 kilometers but up to 8 kilometers. More than 6 kilometers but up to 8 kilometers. If the population is more than 10 lakh, then it will be considered as capital assets. If the population is more than 10 lakh, then it will be considered as capital assets. In this case, it is 7 kilometers, but the population is only 4 lakh, not more than 10 lakh. It will not be considered as capital assets. Then it will not be considered as capital assets. In the case of area I, the agricultural land is situated within 8 kilometers. Within 8 kilometers, the population is 10 lakh 50,000, means the population is more than 10 lakh, so it will be considered as capital assets. Next, their J area. The agricultural land is situated within 9 kilometers, and the population is 15 lakh. It will not be considered as agriculture. It will not be considered as capital asset because it should be situated max to max 8 kilometers. The agricultural land should be situated maximum 8 kilometers, and the population should be maximum 1 lakh. Sorry, 10 lakh. Then it will be considered as agricultural land, or sorry, it will be considered as capital assets. So on the basis of such example, we have understand which land, which agricultural land will be considered as capital assets and which agricultural land will not be considered as capital assets. And the agricultural land which is considered as agricultural assets, capital assets, then the provision of capital gain will be applicable on such assets. Now we will discuss it by the way of example. There is a Mr. A, he has a agriculture land, and such agriculture land within 10 kilometers of the municipality. Okay, and the population is, for the example, 20 lakh. The population of 20 lakh. Now he want to sell such assets. Sell such agricultural land. The sale consideration is 5 lakh rupees, and the value is, means he purchased at 2 lakh 50,000. So the profit on sale is 2 lakh 50,000. Whether it is taxable under the head of capital gain or not. So the answer is not, because it is situated, such agricultural land is situated within 10 kilometers or in 10 kilometers. It is situated in 10 kilometers of municipal area, and the population is more than 20 lakh, but it is situated in 10 kilometers, not up to 8 kilometers. So it will not be considered as capital asset. Not a capital asset. It will not be considered as capital asset, and such profit will not be taxable. Under the head capital gain. It will not be taxable under the head capital gain. So on the basis of example, we have understood which land will be considered as capital assets and which land will not be considered as capital assets. Explanation regarding the gain which is arising of transfer of urban agriculture land. Now we will discuss what will be the treatment of capital gain when there is any transfer of urban agriculture land, is that as per the provision, the agricultural land which is in the rural area, means if there is any rural agricultural land, then such rural agricultural land will be exempted from the capital gain, means the provision of capital gain will not be applicable on the rural agricultural land, because the rural agricultural land will not be considered as capital assets. But in the case of urban agricultural land, if there is any urban agricultural land is a transfer, means there is any if there is any urban agricultural land is transferred. So if there is any gain which is arise on the transfer of, such urban agricultural land, then such gain will be known as, or it will be considered as capital gain, and it will be taxable under the head of capital gain head. Means such a gain will not be, means the gain which is arise on transfer of urban agricultural land will not be considered as agriculture income. This will not be considered as agriculture income. This will be considered as It will be considered as capital gain. It will not be considered as agriculture income. But if there is any gain which is arise on the transfer of urban agriculture land, then such a gain will be considered as agriculture income. It will be considered as agriculture income for the purpose of taxation. It will be considered as agriculture income. But there is any profit which is arise on transfer of urban agriculture land, which is arise on the transfer of urban agriculture land, then such a profit or then such a gain will be taxable. Then such gain will be taxable. It will be taxable under the head of capital gain. Under the head of capital gain. So in the case of urban urban agriculture land, it is capital assets. It is a capital assets, and gain will be taxable under the head of capital gain. In the case of rural agriculture land, then it is not a capital assets, and gain will be taxable as agriculture income. For the purpose of taxation, it will be considered as agriculture income. It will be considered as agriculture income. Now we will discuss other assets which are excluded from the definition of capital assets. Now we will discuss other, just like specific gold bonds. Specific gold bonds which are issued by the government, central government. There is any of the specific gold bonds which are issued by the central government. Then these bonds are excluded from the definition of capital asset. It means if there is a transfer of these specific gold bonds, no capital gain will be arised. No capital gain will be arised. Next is special bearer bonds. Special bearer bonds which are issued by central government, special bearer bonds which are issued by the central government will not be considered as capital assets. Gold deposit bonds. The gold deposit bonds which are issued by the government, if there is any gold deposit bonds which are issued under the gold deposit scheme 1999, there is a gold deposit bond which is issued under the gold deposit scheme 1999, or gold deposit certificate which is issued under the gold monetization scheme 2015, which is notified by the central government. Then such gold deposit bond will not be considered as capital asset. Is that specified gold bonds which are issued by central government, special bearer bonds which are issued by central government, and gold deposit bonds which are notified by the central government will not be considered as capital asset. It will not be considered as capital asset. So to summarize, now we will summarize the definition of capital assets. Now we will summarize the definition of capital assets. What will be considered as capital assets and what will not be considered as capital assets, because in the case of capital gain, or according to the charging section 45 of the Income Tax Act, when there is any gain which is arise on the transfer of capital asset, then such a gain will be taxable under the head of capital gain. So the capital asset is one of the important terms. So the capital assets means any property which is held by the assessee, whether such property is connected with the business or not. Means any of the property which is held by the assessee, whether such property is related to the business or not related to the business, will be considered as capital assets. And any of the security which is held by foreign institutional investors, if there is any security in which a foreign institutional investor invests, then it will be considered as capital assets. Any property which is held by the assets, or any security which is held by the which is held by the foreign foreign institutional investor. It will be considered as capital assets. But a capital asset does not include, means exclude number one, stock in trade. Stock in trade, consumable store, raw material which is held for the business or profession. Is that any of the stock in trade? If there is any property which is held as stock in trade, if there is any property which is held and stock and trade as a raw material, as a consumable for the purpose of business, then it will not be considered as capital assets. For the example, there is a person, he is deals in property, means he deals in buildings. He purchased the buildings and he sold the building. In this situation, he, in his balance sheet, he show the buildings or land as a stock in trade, not as a property. So in this situation, it will not be considered as capital assets. It will not be considered as capital assets. Is that when he will transfer or he will sell such property or such building to the any person, the capital gain will not be arise. Means the gain will not be taxable under the head of capital. Number two, personal efforts, personal effects, just like personal use of furniture, personal cloth will not be considered as capital asset. Jewelry, but jewelry, archaeological collection, drawings, paintings, work of art, speculation, these all are considered as capital assets. These all are considered as these all are considered as capital assets. Means these personal effects will be taxable. Means if any of the gain which is arise on the transfer of any of these personal effects, just like jewelry, archaeological collection, painting, drawings, then such gain will be taxable under the head of capital gain. Next is rural agriculture land. Rural agriculture land will not be considered as capital assets. Is that if there is any transfer of rural agriculture land, not a urban agriculture land, rural agriculture land, then and the profit arise on the transfer of such a rural agriculture land, then it will not be taxable. Then such gain will not be taxable under the head of capital gain. Then such gain will not be taxable under the head of capital gain. Next is gold bonds. 6.5% gold bonds, 1977, 7% gold bonds, 1980, National Defense Gold Bonds, 1980, Special Bearer Bonds, 1991, which is issued by the central government. Means the gold bonds which are issued by the central government. The gold bonds which are issued by the central government will not be considered as capital assets. Next, the gold deposit bonds. Gold deposit bonds, which is issued under section, gold deposit bonds, which is issued under gold deposit scheme 1999 and gold deposit certificate which are issued under gold monetourism scheme 2015 and which is notified by the central government, then it will not be considered as capital assets. Means these five things: stock and trade, personal efforts, personal effects, rural agriculture land, gold bonds and gold deposit bonds, these all are not considered as capital assets, and any of the profit or any of the gain which is arise on the transfer of any of these will not be taxable under the head of capital gain. It will not be taxable under the head of capital gain. So this is the definition of capital assets. This is the definition of capital assets. Now, now we will discuss the term short-term and long-term capital assets. What is the meaning of short-term capital asset and what is the meaning of long-term capital assets? Means the capital gain arise on the transfer of capital assets. So the capital assets are divided into two parts: short-term capital assets and the long-term capital assets. The short-term capital assets and the long-term capital assets means the capital assets are divide capital assets Assets are divided into two parts. Number one, short term capital assets, and number two is long long term capital assets. These are two type of assets. So now we will discuss short term capital assets and long term capital assets. Definition. Definition. As per the section 2 subsection 42A. As per the section subsection 2, as per the section 2 subsection 42A, normally section 2 contain the definition. Section 2 of the Income Tax Act contain all the definition. So, as per the section 2 subsection 42A, the short-term capital assets means the asset which is held by the assessee for the period which is less than 36 months. Is that if there is any asset which is held by the assessee for the period of less than 36 months, the assets, any of the capital assets which is held by the assessee for the period which is less than 36 months immediately preceding the date of its transfer, then such assets will be known as short-term capital assets. Then such assets will be known as short-term capital assets. Is that when there is any assets, when there is any asset which is held by the assessee for the period of less than 36 months, then it will be considered as short-term capital assets. For the example, Mr. Ram, he has a building and he purchased it on 1st 4 2009. Now he want to sell he sell it on sell it on 1st 4 2021. For he want to sell such building on 1st 4 2014. So it is sold by the assessee on 1st 4 2021. Means such property is held only for the period of from 1st April 2019 to 31st March 2020, means 12 months, and then 1st April 2022, 31st March 2021, 12 months. And on 1st April he want to sell it. So this is held only for 24 months. So such building will be considered as short-term capital assets. Means such building will be considered as short-term capital asset because it is held for the period which is less than 36 months. Because such property is held by Mr. Ram only for the period of 24 months. So the capital gain which will be arise on such assets will be considered as short-term capital gain. Is that for the example sale consideration is? For the example, the sale consideration is 50 lakh and cost of acquisition means purchase cost, cost of acquisition for the example 25 lakh. The profit is 25 lakh. So it will be considered as gain. It will be considered as short-term capital gain. Short-term capital gain. It will be considered as short-term capital gain because it is arise on short-term capital assets. Because it is arise on short-term capital assets, so it will be considered as short-term capital gain. Now, if there is any asset which is held by the assessee for the period not more than 36 months, not more than 36 months, then not more than 36 months immediately preceding the date of its transfer, then such asset will be known as short-term capital assets. And the gain which is arise and the gain which is arise on the transfer of such capital assets and the gain which is arise on the transfer of such capital assets will be considered as short term capital gain. It will be considered as short term capital gain. So as per the section 2 subsection 29a, as per the section 2 subsection 29a, if there is any assets, if there is any asset which is not a short term asset, if there is a assets which is not a short term capital asset, then it will be considered as long term capital assets. Means if there is any asset which is held for the period of more than 36 months, for the period of more than 36 months, then it will be considered as a long term capital asset. Then it will be considered as a long term capital asset. For the example, Mohan, he has a furniture, or he has a plant and machinery. He has a plant and machinery. He purchased it on 1st April 2018, and he want to sell it on 31st March 2022. He want to sell it. So the period is from 1st 4 2018 to 31st March 2022. The period is 4 years, 18 19, 19 20, 20 21 and 21 22. Means 4 years, means 48 months. 48 months. So such plant and machinery will be considered as a long term capital assets. It will be considered as long term capital assets. And the sale consideration, is, for the example, 25 lakh. And cost of acquisition, for the example 20 lakh. Then the profit is 5 lakh. Then it will be considered as long term capital gain. It will be considered as long term capital gain, because the gain which is arise on the transfer of long term capital assets, then such gain will be known as long term capital gain. Is that such asset is held for the period of more than 36 months, means it will not be considered as short term capital assets. Then it will not be considered as short term capital assets. So it will be considered as long term capital assets, and the gain which is arise on the transfer of such long term capital asset will be considered as long term capital gain. It will be considered as long term capital gain. So the assets which is held for the period of less than 36 months, it will be considered as short term capital assets, and the asset which is not a short term capital asset, then it will be considered as long term capital assets. Thus, capital asset which is held by the assessee for the period more than 36 months immediately preceding the date of transfer, then it will be considered as long term capital assets. Exceptions. Now we will discuss the exception. When there is any assets or there is any security which is held only for the period of 12 months, but it will be considered as a long term capital assets. Is that if there is any security which is listed, in the recognized stock exchange. Is that when there is any security other than unit which are listed in the recognized stock exchange, or there is the unit of any equity oriented fund. The unit of equity oriented fund, or the unit of Union Trust of India, or zero coupon bonds, means if there is a listed security or unit of equity oriented fund, or unit of Unit Trust of India, or zero coupon bonds, if these things or these capital assets are held by the assessee, held by the assessee for the period of more than 12 years, for the period of more than 12 years, then it will be considered as long term capital assets. Then it will be considered as long term capital assets. Is that if there is a listed security, there is a listed security. Number two, units of unit of unit trust of India, unit trust of India, zero coupon bonds, zero coupon bonds. And the next is unit of equity oriented fund, unit of equity oriented bonds. If these security held for the period of, if these security held for the period of, for the period of more than 12 months, then it will be treated as, it will be treated as long term capital gain. It will be treated as a long term capital gain, not short term capital gain, because as per the provision, if there is any asset which is held for the period of more than 36 months, then it will be considered as long term capital gain, but long term capital assets. But in the case of these four security, in the case of four capital assets, means in the case of listed security, in the case of unit trust of India, the unit of equity oriented fund, and the zero coupon bonds, if these are held for the period which is more than 12 months, which is held for the period more than 12 months, then it will be considered as long term capital assets. Then it will be considered as a long term capital assets. And there is any transfer of these shares, these units, then the gain which will be arise will be considered as long term capital gain. Long term capital gain, this is the exception of, this is the exception of long term capital or short term capital assets. So if a security which is listed in the recognized stock exchange, or the unit of equity oriented fund, or the unit of unit trust of India, or the zero coupon bonds, however, be considered as long term capital assets if the same is had, if the same is had for the period more than 12 months, if the same had by the assessee for the period more than 12 months, just preceding the date of transfer, just preceding the date of transfer. Further, the sale of, further, the share of the company which are not recognized in the stock market. If there is a share of a company not being a share which is listed in the recognized stock exchange in India, or the immovable property, land, building or anything, land, building, will be treated as short-term capital assets if these are held for the period not more than 24 months. Is that in the case of unlisted shares, or in the case of immovable property, in the case of immovable property, in the case of unlisted share, or in the case of immovable property, if these share is held for the period of, less than 24 months, then it will be considered, as short-term capital assets. Is that immovable property, if immovable property or the unlisted share is held by the assessee for the period of less than 26 months, less than 24 months, just preceding the day of transfer, then it will be considered as short-term capital asset. Means if these shares, unlisted share or the immovable property is held by the assessee for the period more than 24 months, not 36 months, more than 24 months, then it will be considered as long-term capital assets. Then it will be considered as long-term capital assets, and the gain which is arise on the transfer of such a long-term capital assets will be considered or will be treated as long-term capital gain. It will be considered as long-term capital gain. So the share of the company, unlisted company, or the immovable property just like land and building or both would be treated as a short-term capital assets if it is held by the assessee for the period not more than 24 months immediately preceding the day of transfer. Thus, the period of holding of the unlisted share or the immovable property will be treated as long term only when it is held for the period of more than 24 months, not 36. Not 36. Is that for the purpose of this? If assets if assets held for the period of for the period number one less than 36 months, then it will be considered as short-term capital assets. More than 36 months, it will be considered as long-term capital assets. But in the case of listed security, zero coupon bonds, but in these cases, if it is held in the case of these security, if it is held for the period less than 12 months, means not more than 12 months, not more than 12 months, then it will be considered as short term capital assets, and more than 12 months, more than 12 months, then it will be considered as long term capital assets. It will be considered as long term capital assets. Next, in the case of unlisted share or immovable property, in the case of unlisted share or the immovable property, if it is held for the period not more than 24 months, then it will be considered as short term capital assets, and if it is held for more than 24 months, then it will be considered as long term capital assets. Okay, this is the concept. This is the concept related to the long term capital asset and the short term capital asset. Other than these assets, normal period is 36 months. If it is more than 36 months, then it will be considered as long term capital assets. If it is less than 36 months, then it will be considered as short term capital assets, except these assets. Thus, the period of holding of the unlisted share or immovable property, if it is held for the period of more than 24 months, then it will be considered as long term. Now, we will discuss some important and certain terms. Now, we will discuss some important terms and some important meanings. Number one, what is the meaning of equity oriented fund? There is the exception in the respect of equity oriented fund. So, what is the meaning of equity oriented fund? The equity oriented fund means a fund which is set up under the scheme of mutual fund. The equity oriented fund means the fund which is set up under the scheme of mutual fund. Mutual fund which are specified under section 10 subsection 23D. The mutual funds which are specified under section 10 subsection 23D, and in the case where fund invested in the unit of another fund, where the funds are invested in any other fund which is treated as recognized stock exchange. So the minimum of 90% of total proceeds of such fund is invested in the unit of such other funds. And number two, Such other fund also invest a minimum of 90% of its total proceed in the equity share of the domestic company which is listed in the recognized stock exchange. Is that when there is any fund which is set up under the mutual fund which is specified under section 10 subsection 23D, and in case where the fund, in case when there is a fund are invested in the unit of another fund which is treated which is traded on the recognized stock exchange, means which are listed in the recognized stock exchange, a minimum of 90%, a minimum of 90% of total proceed of such fund, a minimum of 90% of total proceed of such a fund is invested in the fund of or in the unit of other fund, or and such other fund also invest a minimum 90% of total minimum of 90% of total proceed in the equity share of the domestic company which is listed in recognized stock exchange, then it will be considered as equity oriented fund. And in other case the minimum of 65%, the minimum of 65% of total, the minimum of 65% of total proceed is invested in the equity share of the domestic company which is listed in a recognized stock exchange. So it will be considered as equity oriented fund. So it will be considered as equity oriented fund. However, the percentage of equity shareholding, means 90% or 65%, or the unit which is held in the respect of the fund, as the case may be, it shall be computed. It shall be computed with the reference to the annual average of monthly average. Means it will be calculated to the reference to the annual average of monthly average of opening and the closing figure. Means it will be determined on the basis of monthly average of opening and closing. So this is the term equity oriented fund. What is the meaning of zero coupon bond? Which is the meaning of zero coupon bond? So the zero coupon bonds are those bonds which are issued by the any infrastructure capital company. The bonds which are issued by any infrastructure capital company or infrastructure capital fund or by the public sector company. Any fund or any bond which are issued by the infrastructure capital company or infrastructure capital fund or public sector company or schedule bank on or after 1st June 2005, on or after 1st June 2005, and a bonds in the respect of which no payment and the no benefit is received and receivable before the maturity. Means in the respect of zero coupon bonds, no benefit will be received before the maturity. Means the benefit will be received only on the redemption of these shares, the redemption of these bonds, and these bonds are notified by the central government. These bonds are notified by the central government. So these bonds will be known as zero coupon bonds. So this is the meaning of zero coupon bonds. Note the income from the transfer of zero coupon bonds, the income which is arise on the transfer of zero coupon bonds, means when the zero coupon bonds not held as stock entry. Is it treated as capital gain? Means when there is any transfer of zero coupon bonds and any gain arise on the transfer of such a zero coupon bonds, then such gain will be taxable under the head of capital gain. Section 247, clause 4A provides that maturity or the redemption of zero coupon bond shall be treated as the transfer for the purpose of capital gain tax. Means the maturity or the redemption of zero coupon bond shall be treated as transfer. Means if there is any maturity or if there is any redemption of zero coupon bond, then it will be considered as transfer and we will calculate capital gain. So this is the period. Now we will discuss the period of holding in the summarized form. Period of holding in the summarized form means where it will be considered as short-term capital gain, as capital gain, or as a short-term capital gain, or as a long-term. So short-term capital assets, if held for the period less than or is equal to 12 months, is that if just like that, if these four securities are held for the period of less than 12 months, then less than or equal to 12 months, then it will be considered as short-term capital assets. And if these capital assets are held for the period of more than 12 months, then it will be considered as long-term capital assets. So the same Short-term capital asset if held for the period less than equal to 12 months. Security, other security means listed security, the unit of equity oriented fund, zero coupon notes, and the unit of unit trust of India. Then it will be considered as short-term capital assets. If it is held for the period of more than 12 months, then it will be considered as long-term capital assets. In the case of unlisted share and in the case of immovable property. If it is held for the period of up to 24 months, then it will be considered as short-term capital asset. Then it will be considered as short-term capital asset. If it is held for the period less than 24 months, then it will be considered as, sorry, if it is held for the period more than 24 months, then it will be considered as long-term capital asset. If it is held for the period less than 24 months, then it will be considered as short-term capital asset. And in all other cases, if it is held, if the capital asset is held for the period of 36 months, then it will be considered as short-term capital asset. If it is held for the more than 36 months, then it will be considered as long-term capital asset. So this is the summary in the respect of where the assets will be considered, the capital asset will be considered as short-term capital assets and the long-term capital assets. This is the summary. Now we will discuss the determination of period of holding. Determination of period of holding. When we will determine and how we will determine the period of holding. How we will determine the period of holding. So we will discuss in our next class. We will discuss this concept and the another concept in our next class. So for the purpose of this, kindly consider and kindly revise the previous sections or the previous defined concept so that you can properly understand other concepts which are relating to such head. So thank you so much for watching this video. We will continue about this class in the next part. Kindly consider next video also. Thank you so much. Bye bye and have a nice day.